What's going on, everybody? Let's get this lighting going. All right, let's see if that's better lighting today. We'll go with it. Hey, everybody! It is Dan the Chartman here, coming to you on September 4th of 2023. We're gonna go ahead and jump into price today. Today is a Monday. It's a Labor Day, so it is a holiday. We're just going to go ahead and start with our KuCoin chart just to quickly do some run through of what I've spoken about in prior videos to give us an opportunity to kind of see price in terms of relative trading boxes and macro supports and resistances, and then we'll get a little bit more into the micro. So I have talked about this in the past. This is our selling climax where price, I guess, it's a climax of sell-off, and then you mark that, and then you come up to the retracement, and then once we peak from that retracement, that's called the automatic reaction. And if you can see right here on the macro, on the weekly, well, really the 4-day, this zone has been an area to look for trades. We come out of the zone here, we get bought back up, we hit the top of the zone, we fall, we find support. Inside the box, we come above the box, we come back and touch the box. Right now, we could say we are at support because we got supported in recent trend off of this box. Now, the question is, are we going to lose the support and come down to further levels? If so, where are those further levels? And we'll start with that. So I will go ahead and look at my other chart here, the Coinbase chart, in which I do my spider line. I don't know what this is. We'll go ahead and get that off. So, like I said, what the heck is this? Okay, I think that's gone. All right, so on the larger time frame, I use the weekly time frame to create these spider lines, which start from areas way off into the distance in the past here. They start at candle closures, not wicks, but candle closures on larger time frames. I use the weekly, but you can kind of see generally what's being done. You go way into the past, and then you go from left to right, and you close. You start the ray on candle closures, and you work to your right, and then you lay the ray over the candle closure of a bar, to the right. So I can go over that in the videos, in future videos. If anybody has a question on creating these lines, I think these are super, super effective in finding support and resistance on a large time frame to really gauge where we are at with price. But let's go ahead and see what I'm talking about when it comes to prices inside the trading box. So right here, I talked about this 25 trading box. 25K trading box is where we're kind of sitting on right now. If we fall, my next spider line is, what the heck is this chart? Regular. There we go. The next level down is in the 23 range. I've labeled this as probably a daily support level, and then I have these diagonal support lines coming into the 22.6 range and to 22 range roughly. Below that, we have spider lines, at the bottom of this range where we have our selling climax, and we have some support, and we have this, like I said, diagonal support line. So my next two lines, my next two areas below us at right now, if we fall through this 25K support, would be 22, 22.8 to 22. Basically, I'm saying 22, and then 17 or 18. So 22 and then down to 18. Those are our next two areas. Come below that, we could certainly hit massive support here when it comes to, right here, 11K. Look, we fell here. We could maybe retouch 11.7 roughly. So that's setting us up for, if we had any further down moves, where would we like to see price come? 22, 17, worst case scenario, really 11.7. Remember, we have the green line indicating the Bitcoin halving. I'm using this as a relative frame of mind or relative time frame to really think about my trading. Additionally, let's go ahead and get into the smaller time frame, and we'll see what's happening locally to tell us if we are looking like we're supporting to potentially have some sort of relief here, or if we look like we're still weak, in which we could fall into this zone to 22. So we'll go ahead and look at the 10-hour. I know this is messy, but it makes sense to me. And once you get these lines going, support and resistance lines, Fibonacci's, you'll understand. But right now we made a low and a high. That's a trading box that I've created, in which we kind of peak sold off. And then we had on the 1 hour our retracement. So for me, that was our sell-off. That was our selling climax and our automatic retracement. If you see in trend, we came to the bottom of the box. We got support off the spider line. We came to the top, towards the top of the box. We actually fell from the spider line again, and then we came and kind of finally found support off this point of control area, which is let's see where we can get our point of control right here. So look at this point of control. We found a way to pump off, and then we came above the range here, and then we double top down, and we actually also hit a golden pocket up here. Double top down, we fell back inside the range. We tried to hold the point of control, but we fell, and then we made we got bought up below this prior wick. That could have been a trade, and that right now we're kind of rolling over. And my question is, hey, are we going to potentially find support here, maybe at the spider line or maybe this golden pocket, to find some sort of relief, whether that is simply, a little like double bottom up to, any of these lines here. This is a former March value area low, March 20 value area low. We could come up to this golden pocket spider line. We can come up to this point of control golden pocket. So in the short term, we're saying to ourselves, okay, well, locally, are we getting some support to have maybe some sort of relief to kind of potentially roll over further? And like I said, my next level down here is, 23. So that's kind of what I'm starting to think of. If we find some local support, maybe we can come up to any of these levels, form an overall another, lower high, and then come down, or will this support be more massive and say, hey, maybe we find some support. We come above this little micro trading range, retouch it, come up, and potentially we come up and we come to a higher level. 29K is a big level for me. We have 29K roughly right here. It's a point of control. It's also a prior on the weekly. It shows as a level of resistance here when you go ahead and pull. This right here, this is 29. This is a value area low. Okay, so this is the Coinbase value area low at about 29. And that's basically encompassing this entire huge range up here. The value area low is 29. So 29 is a level that I'm very, very much looking into if we come up. But let's go ahead and continue to look at the smaller time frames here, and we'll say, hey, if we were to make a macro, I guess mid macro lower high here, 29 is an area where I'm interested in. I'm very interested in this. We come a little further, we have a value area low from this range. We have a point of control from this range, a value area high from this range. But even if we come up to those areas, we are still making an overall lower high. It's bearish structure. Potentially we can roll over and start and really have a good opportunity to get let's say we come up 29 and we kind of roll over to 22. If you were to enter right up here at an advantageous spot, that's a 24% down move. That's not a bad trade. So we'll go ahead and say to ourselves, well, if we are starting to view this price bearishly, we're seeing a potential double top form. I guess you could say a head and shoulders formation. Potentially, we can come and pin that right up here, 29. We said that's the value area low from that big range. Potentially a little higher, but if we're just saying for easy remembering, 29 is an area that I'd like to get into. Then we work our way down and we say, okay, well, what kind of areas could we get down here? And we kind of already mentioned if this continues to be lower lows, we could find a way to maybe get local support, come up, and then find a way to fall, from maybe a golden pocket up here, maybe this value area low from this range. Again, I'll kind of pin that. See that? I guess that's not the value area low I thought we had. I guess my value area low changed from this range. Regardless, there we go. So, I pinned this value area low roughly, 26.6. So yeah, I'm kind of drawing this right here, coming up to roughly, 26.6, a little bit higher maybe. But we're just trying to give ourselves an overall idea of what could happen. If we have lower highs like this could work out, retouching this value area low, coming down. I have another point of control, or I have a point of control right here in a golden pocket. We could just make an overall lower high structure continuation, or we could come up to 29. Still would be lower highs overall, and then we could roll over. So that's a bearish sense. And that's basically, the bearish side. And we'll go ahead and look at the bullish side, in which we could say, hey, maybe we get the support here on the local timeframes, right? Maybe we get the support we need. Maybe 25 will be, we are at spider lines right here, right? We got a couple. I got 3 spider lines here. Maybe we support this area. Maybe we get supported by the top of that range box, the 25K range, top of the range right here. We fell. We got supported. Maybe we get supported again, in which that opportunity could present itself. So we need to think of this as potential support too, right? We're not just looking at the bear side. So right now we got to ask ourselves what is going on here, and we can say, okay, well, we have a point of control. We kind of came up, fell. We can ask ourselves, okay, well, maybe we can find some local support here, local bottoming, in which we could say, we came below this low. We didn't quite exit our range here, but we came below this low. We could say to ourselves, well, maybe we settle, right here, and maybe we can leave this little micro range, retouch it, and find some upside. Okay, so that's what I'm thinking. And I'm trying to set my trades up in which we can try to capitalize on any up move here. So let's just remind ourselves where we are in price. So we like I said, we came below this low, came to the point of control, and we fell in recent trend from the point of control at 26. So let's look for some local trades here, and we'll see if we're in a position to have something set up. On Saturday, I created some trades here, but let's go ahead and just remind ourselves. So if we come below this wick, we could trade this, coming below and closing above, kind of like how we did right here, where we came below this wick, closed above, and we had a little up move. So I'll just start with, coming below this wick, closing above, and coming up. Could always lose this range right here. We could lose this range. We could lose this range and get bought back up, kind of like coming below this wick, getting bought back up. So that's possible, right? So we'll start from bottom to up, for lack of better words. Come below this range, close above, we can come up. Come below this wick, close above, we can come up. And then let's see what we had here yesterday or Saturday before we kind of made these highs. I kind of had us saying, hey, we have a spider line, we have a golden pocket. Let's see if we still want to use that. We could say to ourselves, maybe change the position of that golden pocket. And let's just go ahead and we'll put the golden pocket right there. And we'll just call that spider line golden pocket, and we'll keep that like that. Again, the spider lines are these horizontal rays. If you have questions about that, guys, please leave a comment. I would love to answer your comment. I'd love to provide value to you. Okay, that's my service. That's what I would like to do. So you could say that from that wick we came up, made these highs. We kind of already came to that golden pocket. So we'll keep this right there from this wick all the way to this high from Sunday. We obviously have this type of point of control. It's a smaller range. I'm going to get rid of it. We had a little smaller range right there. We do have a point of control right here. Get rid of it. We're going to keep that wick. I like keeping this wick because this is the top of this local range. This is the bottom of the local range. This is the top of the local range. We came below the local range, came in the local range, came to the top of the local range. We fell, and now we're at the middle of the range, and we're asking ourselves, hey, can we go ahead and pump out of this range? Actually retouch the top of the range, which was formed here, and pivot out. That's a question we have if we're starting to get bullish. So if we're bullish here, we could potentially lose this range or come above this range, retouch, and go. So that can be a trade entry right there. But, oh wow, we're getting some sort of bullishness here. So we did come to a local golden pocket below us. Wow, this is pumping. So I'm not going to get in this because I'm not fully ready, right? I'm not just going to enter this trade because I'm not fully ready for it. So we have low to a high. We have golden pocket. So we could say, yeah, that's a golden pocket. So, we kind of this low, came to that high. That's a golden pocket. We obviously, we're now pumping off this golden pocket. I wasn't ready for the trade, so I got to fucking, sorry, lack of better words. Sorry for the, pardon my French, but this is a big pump here. Decent pump, but yeah, we're coming off this golden pocket. Below us, we have a notification, but I'll just go ahead and remove that notification. And we're going to just move this notification right here. So let's just say if price comes down, we have this golden pocket and spider line. Okay, check. What else could we have if we came down? Well, we could have this. Remember, this is something that was taken from Jason Casper's channel. He calls it a CDW. If you want to refer to Jason Casper's channel, just tell him I sent you in the comment section. But if we come below this wick, close above it, that's a trade. Below us, we have the notification, the golden pocket, spider line, perfect. And right now, we are obviously seeing, some sort of buying action. We got to look into it. But right now, let's just remind ourselves, hey, locally, we formed a range low, range top. We came above the range. We came below the range. We came in the middle of the range, pumped to the top of the range. Now we came to the bottom of the range or the middle of the range. Now we're seeing some buying action. Our question marks are, hey, are we going to potentially fall back to the bottom of the range in which we could get a trade by us coming below this wick or coming down to the golden pocket spider line? Potentially we could lose, this range again, come below this wick, get that back up and come bought back up and come back to the range. That's what we're thinking locally related to this range. Again, guys, thinking relative to a range makes me more confident as a trader, makes me way less emotional. Just think to ourselves, where are we relative to our range? We got a low, a higher range. Perfect. We're right now, where are we? We're in the middle of the range. Okay. Start asking yourself questions. Hey, what happens if we come to the top of the range? Well, maybe we can come above the range and maybe we don't have the strength yet and we just fall back below the range, right? These are questions that make me personally more confident. So, okay. So anyways, right now we're in the middle range. We're getting some sort of buying action. I don't know what this looks microly. I haven't looked yet. But we can say, hey, if we come above, this prior wick right here, we could potentially find some weakness and fall back down. That's a trade. Okay? So we'll just keep that up here, that idea. And so what would I be looking for? I would look for price to come up. Obviously, we have a daily support line right here, a resistance line right here. We could take that trade. In fact, I might be able to pin that first. So let's go ahead and pin that. Yeah, so look from this high down to that low. Got a golden pocket. Let's see if we can. Let's just pin the high right here, which is that high, down to this low. And we'll just create a box for ourselves, okay? we'll create a box for stuff. We'll say, hey, that's a daily support line or resistance line. We obviously have some relative action at that line. I marked it prior. We'll just call it, do this. We'll say, hey, our alert's going to be, we're going to call it a daily support line or daily, and then golden pocket. So if we have price coming up again into this area, we'll have a golden pocket in this daily support level. Potentially, we could roll over from here. Above that, we can ask ourselves, okay, well, what happens if we come above this local wick? We're going to call this what? We're going to call this a CDW, remember. And I just like to have that in the color blue because I like the orange to be our trading boxes, just like this should be blue. Perfect. All right, guys, you kind of seeing what I'm putting down here. I know it's a little messy, but price comes up. We got a golden pocket, a daily support level, a resistance level. We could find some weakness and roll over. We could come above this wick, come above it, close below it, and that's a trade, a short trade. We could come above this wick, but I'll just go ahead and pin up here, which is this prior high, saying, hey, we could come, like we said, above this prior high, which is above this range, right, top, and we could find weakness and fall, right? We could also, and we have that notification, okay, perfect. And then we come up here to this notification, and then a golden pocket and a spider line, and we could roll over. Perfect. Right, that's coming from this impulse high to low. That's our golden pocket. Oh, I'm sorry. This golden pocket is actually a prior golden pocket from here. From this, or maybe it's from here to this low. I think it's from that high to that low. It's a golden pocket, but you can tell that look, this wicks cannot close above this. This comes up, falls. This can't close. So that's an area for me. It's a spider line in this former golden pocket. So we are saying to ourselves, okay, what if we come up to this golden pocket in this daily resistance? We could trade that. What if we come about this wick? We could come up, close below the wick, and fall. That's a short. We could come above this last high, which is at the top of this range. We could come above it and find weakness and fall. Or we could come to this notification, this golden pocket, this spider line, and we could just trade that as a short. Where's my trading box? I do not know. I don't know where I don't know where my rectangle is. Here it is, golden pocket and spider line. We'll just call this a golden pocket and a spider line. Get in the habit of Control A, Control C. I don't like that name. We're just going to call this golden pocket spider line. So yeah, if we come up here, we got a golden pocket spider line. If we come above here, this is that March value area low. And obviously we have the swing, the impulse high to low, this golden pocket right here. We're just going to call this a golden pocket spider. Up here again, we have a golden pocket to a point of control. Okay, that's a August 29 point of control golden pocket, August 29 point of control with the red line up to the golden pocket. And then we come above that wick, and then we can come above that wick. So these are trades, guys, that I have locally. Right here, if we were to come down to our spider line golden pocket or below this wick, and then we could come to the daily resistance, golden pocket. We can come higher to the top of this range and fall. We come up to golden pockets. We can come up to value lows, golden pockets, spider lines, whatever. You guys do this consistently. Just try to create these trades for yourself in the morning. I'm telling you, you'll be more confident because you'll know where you want to get in, and you need to know when you get into these areas, what are you looking for? So that's where having the Fu Manchu free market cipher, essentially, I like using it because I can't afford the market cipher. So this is the VMC separate B divergences. For me, we're looking for maybe a mid minute to low hour sign of direction to the upside if you were to try to trade long. So let's just go ahead and look at that. What would that look like? For me, this pump that we were mentioning a second ago, obviously it's actually looking weak because look, we come higher in price and we actually come lower in momentum. It's actually trade worthy. We could set a trade here and see that come down, but we've kind of missed it already. But let's go ahead and say to ourselves, all right, well, what could we be looking for locally now that we've had some sort of sell-off, this morning? We could come below this wick, and we could try to see if momentum's continually coming up, or we could maybe let's say we could just kind of come here, we could settle down, come to our level. Maybe we could just do this. We could do this. And what am I showing here? I'm showing, hey, price, cooling off, coming down to our level to the, below this range. Like I said, where were we right here? The middle of the range. Now we're towards the bottom of the range. So relative to the bottom of the range, we could come out of the range, come to a golden pocket, and then we could say to ourselves, we come up, we settle, we show some direction on a 24-minute, which isn't nothing. It's definitely has some significance. Show some upward direction momentum and downward direction in price. That's divergent action. We would like to see potentially money flow, showing some sort of uptrend. So let's just say we come up, maybe we come down, maybe we show some sort of uptrend in money flow, combining money flow action with momentum action. If those both are divergent to price action, those two together, they work really, really well on this indicator. You can also use these VWAPs, which are the yellow boxes, or not boxes, but the yellow markers here. And if you show divergent action on those, that's what I call a triple threat. And I like taking price with those I like taking longs and shorts with my triple thread trades. When I have VWAP, money flow, and momentum all showing me divergent signs to say that we are potentially moving the other direction, whether that be shorts or longs. So right now, locally, we're looking at some volatility. We'd like to see some settling. I don't like to just get in when we have the volatility because the price is kind of pinched. Come out, see how it's like pinched. We're volatile, we're pinched. I just don't like it. So personally for me, we'll come down, potentially settle down, and I'll look for that. Okay. I'll look for something like that. But overall, we're really not looking that bullish in my eyes, because look, we come up and we just have a sell-off. Boom. Right? Boom. And then we come below these lows. We come really low in the range. So we'll see. We'll see if this acts as a good buying area locally. But that's what we're looking for. Okay? So we're not going to force anything. If we force something, that you're going to lose your money like pretty much 9 times out of 10. So just don't force it. Try to be disciplined, guys. If you guys are learning this and you want to, take a chance and fail, I'm not saying you guys will fail, but I'm just saying that if you want to take a chance and you're risking money, please just risk only what you are willing to lose. Okay. If you're trying to make a trade here and you're going to risk $5, if you were to let's say you wanted a long here, you set your stop loss below this prior low. if you lose $5, ask yourself, is it okay if I lose $5? Did I do the right due diligence to be confident in this trade that even if I lose $5, I can live with myself at night? Can I sleep with myself at night? Okay, knowing that I make that trade. Can I just say, you know what? It's okay. I did my work to enter this trade how I thought. So thought. I had proper risk management. I was only willing to lose a number that I was confident, or that if I lost it, it would be okay. If you can say those things, that you did your due diligence to enter properly, and you risked amount that you can live with at night, you're on the right track, okay? Training's not easy. You will fail, and it's okay. I want you guys to fail. I want you guys to learn, but learn in a way that is not detrimental to your mental. It's not detrimental to your livelihood, and you guys will be okay. All right, folks? So that's it. Dan the Chart Man out. I hope you guys have a wonderful week. Enjoy your Labor Day. Everybody have a great one. And if you guys found value of this video, if I was able to give you hope, if I was able to allow you to learn something, I would love a subscription. You guys would be my first subscriber today. I'd love a like, and I'd love a comment if you guys want to engage with me. I will answer your questions. Spider lines, mindset, whatever the heck you want to talk about, that's what I'm here for. So you guys have a great one. We're looking for some local settling of price here, maybe some divergent action down here. We have a level up here locally, and that's it, guys. That's where I'm looking. That's where my mindset is before I close this video. Price could come up locally to our box. Price could come down here to our box, and we're just waiting. We do not refrain from the boxes we create, because then if we refrain, then we lose trust in on the work that we did. And you guys got to trust the work that you do here, okay? I trust that I have reasons to get in here. I don't trust that I have reasons to get in now. I didn't pre-market, okay? We come up. This is an area we pre-marked, okay? Boom. We come up. We see some divergent action. Price does this, comes up again. We see higher highs, lower lows, and momentum. Let's say we do this on the 12-minute. Let's say we come up higher highs, lower lows, and momentum. That pairs with our location. Maybe we see money flow making lower lows. I'd like to see those both together, momentum and money flow working cohesively when we come to our level. But number one, folks, mark your levels. Have multiple reasons at these levels, not just a golden pocket. What else is going on? You have areas where price has fallen. Boom, boom, boom. We have price respecting here. Okay, this is probably like a point of control right there. Exactly, point of control. We have price around this marker. Boom, we got a golden pocket. Boom, those work together to give me multiple reasons to enter. We come up, we show some action of higher highs, lower lows in money flow, lower lows in momentum. We enter wisely. We risk what we are willing to lose. If we are 110% confidence and we still lose, you say to yourself, it's how the cookie crumbles. I'll get it back next time. Okay, I'm not going to give up. I'm not going to get too emotional. I did my due diligence. I was willing to risk. I knew what I was willing to risk. I had that number. I was disciplined in risking that number. It didn't go my way. That's how life works sometimes. That's totally okay. Your resilience to keep going and keep making that next trade, knowing that you're making the right decisions, will make you successful. All right, folks. Dan the Chart Man out. We're going to see what happens here today. And that's it, folks. Everybody have a great day. Have a great Labor Day. Peace out.